Thank you for tuning in. I am your host, Joseph Martin. Hit that like and subscribe button to support the channel and hit that bell icon to receive notifications. All right, guys, we are 3 videos into this series about whole life insurance. And if you haven't done so, I would highly recommend that you watch those first 3 videos before diving into this one. I'll put links up on the screen and down in the description. Now, before we go any further, this is not financial advice. Read the disclaimer in the description. Let's get to it. Most people who know a little about life insurance do understand that as they get older, getting a whole life policy on yourself gets much more expensive. But what they don't know is the how behind the why. The why is kind of self-explanatory. If someone has more years behind them than they have ahead of them, opening a new life policy to insure this person costs more. Understanding the different factors that go into calculating the cost of a policy might cause you to act with a sense of urgency, besides the fact that time is not on your side as you age. Which brings us to lesson number 1, the mortality table. Life insurance companies are in the business of making money. So whatever business they do, it has to make sense for them to do it. The sense that makes dollars is the only sense that makes sense. This means it has to be profitable for them. A mortality table, which is also called a life table, is a chart of data that attempts to calculate the chances of someone passing away before their next birthday based on their age and gender. Data is gathered by tracking a diverse group of males and a diverse group of females in groups of 100,000 or 1,000,000 from birth until the last person in the group passes away. This helps insurance companies determine the answers to the following 3 questions. 1, probability of death. What is the mathematical chance of a male or female passing away at age 20, for example? Number 2, number of survivors. How many people out of the original group are still alive at age 50? Number 3, life expectancy. The average number of years remaining for people to live at that specific age. This helps insurance companies figure out if it makes sense to insure someone's life by using the data from the mortality table. This is the main reason the cost to open a life insurance policy increases as the insured gets older. Basically, if you plan to get life insurance on yourself or someone else, the younger you or they are when you open it, the better. Not just to have the coverage, death and living benefits, but to avoid the price of paying significantly more for waiting to purchase it later. Also, it's not just age and gender that's used to calculate risk, but hobbies, social habits, driving history, credit, and medical history, which brings us to lesson number 2, underwriting. The life insurance term for when someone is approved for coverage, the company issues a policy. If a customer accepts this offer, they make the first premium payment and the policy is in force, which means it's active. Underwriting is the process that insurance companies go through to review an application and any records they feel are necessary to determine if they are going to issue a policy. Now, remember all those factors I told you they use to calculate the risk of insuring someone? Age, gender, medical history, driving history, credit, social habits, social habits, which include smoking, drinking, and drug use, and hobbies. This is why it's so much cheaper to get life insurance on a newborn than on someone who is older. The older someone is, the more history they have in these areas. When it comes to a baby, all the insurance company can look at is their age, gender, and a very brief medical history. If you think gender shouldn't matter, females statistically tend to live longer than males. So this is one statistical fact that makes insuring females cheaper. So this isn't personal because it's purely based on data from the mortality table. Now, this doesn't mean a female's policy will always be cheaper than a male the same age, because it isn't the only factor they consider when pricing coverage. Lesson number 3, risk and insurability. I want you to focus on this main point when it comes to pricing and getting approved for life insurance. The lower the statistical odds are of the insured passing away for any reason at the time of applying for a policy, the lower the total cost will be for that exact same policy if the risks were higher. It's possible that the risk of an insured passing away shortly after a policy is open could be so high that an insurance company can decide that their life is uninsurable and deny coverage altogether. The insurance industry term for this is called adverse selection, which is a professional way of saying that taking on high-risk policies isn't in the best interest of the company or its current policyholders. This is a prime example of how important it is to value your health and lifestyle choices as an asset, because someone with poor health and or who engages in risky behavior could be ineligible for life insurance coverage, which disqualifies them from being able to leave a death benefit behind in the event of their passing, if they don't already have a policy in place and want to get coverage. Which brings us to lesson number 4, post-health issues. Now that you know and understand how much health could impact the approval and price of life insurance, what happens if someone's health drastically declines anytime after they're insured? Does the insurance company cancel their policy? For the first question, let's think about it like car insurance for a moment. If you're in a car accident while you have car insurance, that company cannot cancel your policy because something happened where you're going to need to use it. That's the convenience of having insurance, for it to be there when you need it. Now back to life insurance. If the insured's health drastically declines after they already have a life policy in place, the insurance company is under contract to provide that coverage. So no, a life insurance company cannot cancel your policy for health reasons unless they existed prior to the policy being opened and you didn't tell the truth about it during the medical questionnaire. Also, the insurance company only has the first 2 years of the policy being enforced to discover anything in order to cancel the coverage, which is called the Contestability Period. After the second anniversary of having the policy, even if they discover something, it becomes much harder for the insurance company to cancel it. Be aware that if an insured passes away from a health-related issue within that first 2-year window, they will do a deep dive into their medical history before paying out the death benefit. But the good news is, a whole life policy is guaranteed renewable, which means that as long as you pay your premiums on time, the insurance company cannot cancel your coverage, and they cannot increase premiums after the policy is issued if your health declines. Which brings us to lesson number 5, temporary insurance agreement. Knowing how valuable having a whole life policy is and understanding how risk makes it more expensive should spark a sense of urgency. And here's an important question. After a life insurance application is completed and enters the underwriting process, what happens if the insured passes away before the policy is in force? I'm glad you asked. Even though you applied for a policy before the insured passed, no death benefit will be paid out to the beneficiary because the policy wasn't active. Even after a policy is issued, it is offered to the owner as a take it or leave it type of situation. The underwriters have reviewed the application and offer the best policy they are willing to give the owner based on what they apply for, or less. The insurance company usually does one of 3 things after you apply. 1, they issue the policy as is. 2, they offer a policy with less benefits and features than you apply for. Or 3, they deny coverage altogether. On average, the underwriting process takes anywhere from 4 to 8 weeks. This is usually due to the time it takes to access the medical histories and other records of the owner, payor, and insured. Losing a loved one is hard enough. Now imagine losing them during the underwriting process while waiting to accept an offer for a policy. There is a way to solve this problem, bridging the gap between the day an application is submitted until one of two things happens. One, the policy is issued and put in force, or expiration. Ask for a temporary insurance agreement or a conditional receipt from your agent. In the event that the insured passes away during the underwriting process and would have been issued a policy, that's very important, the beneficiary will receive a death benefit. The terms will be outlined in the TIA or the conditional receipt. Both of these typically expire in 60 or 90 days because they expect the underwriting process to last less than 8 weeks. Insurance companies usually have a cap on this type of insurance. If the policy's death benefit that's being applied for is less than this cap, it will usually be equal to it. For example, if a company's cap for temporary insurance is $500,000 and someone is applying for a $100,000 policy, if they get temporary coverage, the death benefit will be equal to that same amount of $100,000. In order to get the TIA or the conditional receipt coverage until a life policy is in place, you must pay for it at the same time the application is submitted. So how much does it cost? Purchasing this temporary coverage usually costs a 1-month premium of the life insurance being applied for. So if you can afford to make the monthly premiums on the policy, you should be able to afford the upfront premium to get this gap coverage until the full policy is put in place. You already know. I hope that you learned something, and I hope that you earned something. Hit that like button and put your thoughts down in the comments. Let me know what you guys think. Make sure you check out my other 2 channels, Original Greatness Shorts and Original Greatness Uncut. Make sure you stay tuned for part 5 on whole life insurance, and check out this next video. Take care and God bless.